Asian currencies have had a torrid quarter, the worst quarter since the Asian financial crisis in 1997. Will they look better in the quarter ahead?
Yeah, so on a quarterly basis, you're right, Haslinda, worst quarter for some time yet. But the interesting price action has been that since the middle of May, Asian currencies, as referenced from the Asian dollar index, has actually not made a new low. It was actually holding up above the May low levels. So I think you have gotten to this point that a lot has been priced in, especially with regards to global recession risk. And you have also gotten to a point where even as Fed officials are increasing their hawkish rhetoric, the dollar on a broader basis is not making further headroom, right? So I think if things were to stabilize, especially with regards to the receding of recession concerns, Asian currencies are poised to recover over the next 6 to 12 months.
How much recovery can we expect in the yuan? It's stabilizing right now, but there's still divergence in terms of monetary policy between the PBOC and the Fed. Will that mean further weakness, or where will support come from?
Yeah, I think it's interesting on the Yuan side. This is a central bank, as you mentioned, that is on a easing bias, and as we have noted before, the market is not rewarding central banks with easing biases, and the most pertinent observation is the Bank of Japan. So I think I would really put the PBOC in the same category as the Bank of Japan in terms of where they stand, dovish versus hawkish. So that would essentially also mean that you shouldn't expect too much upside potential on the Chinese yuan. Yes, it is stabilizing because of the reopening dynamics. So it is a mitigation of downside risk. But just from a central bank divergence perspective, actually the currency should actually remain pretty weak against the US dollar.
Teck Leng, what about ultimately the yen, just mentioned, is the worst performing major currency, down about 15% so far this year. The path of least resistance seems to be to the downside, but is there a floor in your view?
The Bank of Japan has not shown us where the floor is, so that is the unfortunate part. It can all culminate into a tipping point where, for example, the pressure on the JGB market were to get too excessive, and the Bank of Japan is forced to intervene and absorb too much JGB to the extent that it causes liquidity issues that we have seen actually in the past 2 weeks. Then they would be forced to cave in with regards to the capping of JGB yield. So I think actually the pressure point is not so much from the currency side, but the JGB market could be pushed into a corner where they are unable or unwilling to expand their balance sheet, and thereby letting the cap go and then driving a reaction back in the yen. So I think the point of reckoning would actually come first from the JGB market.
Yeah, I want to move just to another currency which is often seen as the haven, and it's the Swiss franc. I mean, you've got several trades on this, seeing it getting stronger. Doesn't it occur to you that it is trading more and more like the old Deutschmark than ever?
Yeah, the Swiss franc is a currency that everybody likes in times of crisis, and I think that's the beauty of the current value proposition. And you can't have it better from a central bank that is favoring currency appreciation, because it is obviously preferring currency strength to mitigate inflation. Now, inflation in Switzerland is nowhere above 3%, but by Swiss standards, it is considered uncomfortable, right? So I think you are getting a lot of tailwind for the Swiss franc, be it as a risk-off hedge against uncertain times, be it from a central bank that is looking to unwind the tremendous balance sheet that it has accumulated, even pledging to be buying franc if the franc is too weak. So it actually makes a very good proposition, and we are targeting the franc to easily gain by 3 to 5% over the next 12 months.
Teck, just quickly before we let you go, the rupee at a new time low. We have Goldman Sachs saying that, you know what, it'll get to 80 per dollar in about 3 months. What are your thoughts?
Yeah, when it comes to the rupee, it has a structural trend of depreciation in at least in nominal terms. So that is roughly where we are targeting as well. We are targeting about 79.50 over 6 months. And the fact is that the current account dynamics is very worrisome, even though they are able to buy discounted oil from Russia. But if you look at the current account, it is heading towards 3 to 5% in a situation where the Fed is still hawkish. And that is just a recipe for a weaker fundamental currencies like the rupee to be under pressure. So I think 80 is actually very easily attainable.